Japan's coming monetary policy change, could it spell trouble for the global economic stability? Hello, this is ChartGPT today. You know, there's been quite advertised. The Bank of Japan over in Japan obviously does a lot of things, and they tend to telegraph fairly well what their potential policy changes are coming. You read this in the description box. There's some reference links there, as we always put reference links in there. But anyway, they're basically trying to change their, they basically have been near zero interest rates for quite a while, and now they're ready to change that because of the global impact of inflation, and so they're a little bit worried about that going forward. So this is something they're planning to do starting in next early 2024. I'll just give you an idea. Their basic 10-year government bond yield has starting to rise a little bit in anticipation of that, but we're still below 1%, I think 0.9. So it's way below all the other interest rates around the world, and they're basically preparing for this shift. So we could see rates significantly higher in Japan. So the question is, who cares about Japan? What has that got to do with me? Of course, here's a chart on what the U.S. treasuries are doing. 5 years, near 4 or 5% across the board in terms of all maturities. So the question is, you have Japan at 1%, or less than 1%, and so a lot of the money flowed into Japan. Now here's something else as background information. Japan's government is by far the most indebted of all the major economies in the world. G7 here, you can see they're way in excess of everyone else, and generally they get up to that 250 mark, and that's a danger zone in terms of where the interest payments outstrip the ability to pay. So with that background information, let's take a look at the where it might affect the U.S. First of all, looking at the U.S. debt structure, which is kind of interesting. Even though it has got about 33 trillion right now, a good quarter of that is intergovernment debt, so it doesn't even make to the public market. So about 75% of it, let's say, is in the public domain. And you can see foreign holdings back in 1970 was only 5% foreign holdings. In 1995, with 23, and now it's close to 30. Of course, that's 2022. So you look at another chart of this is you can see the U.S. Versus foreign debt. So foreign investment into the U.S. Treasury market is significant. Here's the major countries that have that, and of course the reason we point this out, Japan is number one. It used to be China, but now it's Japan. So Japan has well over $1 trillion in treasuries of the United States government. So what happens when interest rates rise in Japan? Well, they're not going to buy U.S. treasuries. They're going to buy Japan because now they can. They repatriate their money. They don't need the U.S. treasuries because they were investing because it was earning a lot of interest. And so that's one aspect. And of course that will force up interest rates on the U.S. side and have yet more negative effects on the U.S. economy and globally as well. So that spreads around the world. This is in the global market. The other thing here, you can see here the interest payment in terms of budgetary costs of Japan is down around 5-6%, and of course if you raise interest rates significantly, since they're so low, it'll have just raising it to 2 or 3, that's going to raise their budget requirements up to 20% just to pay interest. Now that's going to have a profound effect on their economy, because obviously they're going to start having huge budget falls. Japan's always been a kind of a conundrum. They've been getting away with this printing of money for a long time, and I suspect that that's coming to an end. Take a look at the U.S. dollar versus yen. You can see that over the last decade or so, it's been kind of trading flat. Pretty tight range actually, from 80 to 120. Yen is one of those currencies. Once it takes off, it takes off. And so we've broken out recently over the 120. We headed to 150, backed off. We're back up to 150, and the outlook is we could see this yen go tremendously higher, which is actually inverse, because this is dollar versus yen, and it's actually yen versus dollar. And so basically what that's saying, the yen currency could fall dramatically over the next few years, which will have reverberating effects around the globe. Take a look at the eye and see what the effects are of a rising debt to GDP ratio has on its economic, fiscal, and financial effects on a country. And give us your take in the comments, in the comment section, in the polling, in the description box of this video, and you tell us, Do we need to worry about whether Japan falls or not? Now don't forget to subscribe.